Whether it's a credit card, debit card, or prepaid card, most of us use some kind of card when making most of our purchases. What are the differences between them? In this video, we'll cover what separates each card type and how to determine which is right for you. Debit cards are generally accepted worldwide and are typically either a Visa or a MasterCard. Alongside the benefit of being usable around the world, debit cards are also considered the safer and more secure option for spending your money since they are limited to the money you own. While we're on the topic of safety, with an N26 account, you get notifications from the N26 app whenever something happens with your money in your account. That way, you have a secure overview of what goes in, and more importantly, what goes out of your account, so you can keep tabs on your budget in the moment. While they share the same shape, credit cards are entirely different to debit cards. You can use them to spend and withdraw in the same way as a debit card, but rather than your transactions being taken from the money in your account, your bank pays the amount and grants you credit. Once a month, you'll have to pay back that credit since you're essentially being loaned it from your bank. Depending on where you are, you may have to pay it all back or just a portion, but that often comes with higher interest rates, something we should all try to avoid. The bonus of credit cards is you can spend more than you own at any given time. However, it's easy to spend above your personal limit without realising it. And potential costs and unexpected surprises can place you in a bad financial situation if you're not careful. Finally, there are deferred debit cards, which can also be considered credit cards. With these, your account balance remains intact until the day your total monthly spending is deducted. But instead of loaning it from your bank, your card is connected directly from your account. So, your total spending gets deducted from your own money at the end of each month. Prepaid cards let you spend money without the need of a bank account. They come preloaded with money for you to spend at selected locations, or you can add money of your own. For the most part, you can do all the usual banking transactions you can with a normal account, like withdrawals, transfers, and card payments. They're convenient and flexible and even anonymous if you don't load over €1,000. However, their biggest drawback is that they can often impose limits on withdrawals, loading, or annual payments. These limits vary by card issuer, but if they're too low, you'll find it hard to use a prepaid card on a daily basis. What's worse, a lot of payment institutions that offer prepaid cards don't have a banking license. That means your money isn't insured by a deposit guarantee fund, and that means you'd likely lose your money if the issuer ever went bankrupt, which is a bit of a risk, I'm sure you'd agree. First off, check where your card of choice is accepted. Is it usable in the stores you want to shop? Is it valid in your country or the countries you fancy visiting? This is probably your top priority when choosing a card. Next, you should learn about the rates and fees you might be charged when using that particular card. These can be anything from overseas withdrawal surcharges to international transfer fees. They can be quite hidden, so try to keep an eye out. Check the card or account fits your financial needs and spending purposes. Things like whether you're looking for guarantees for your purchases or services offered by N26, like insurance or premium benefits. And finally, make sure that any money you put on the card will be insured from things like fraud protection. Looking for more banking and financial advice? Or maybe you're interested in N26 subscriptions. Subscribe to our YouTube channel or check out n26.com.